All right. Hello, everyone. Now we're going to get to the charts portion. Here, I had said that we're going to give you some free stuff, and I'm going to get into that right away. Here, these are the things that I want to go over. Okay, these are the things that I'm going to go over while we're doing this chart analysis. All right, the free stuff that I mentioned, weekly trading zones, what they are, how they're used, demo versus live. What I'm doing right now is going to be in demo, but what I do in the morning is going to be live, and I'll show you how you can tell. TradingView, that's another one of the free things. A range bar, what a range bar is, an up close versus a down close in a bar, the trend, why it's important, the difference between the price panel and the oscillator panel. These are the indicators that you're going to be using, the BBC, the MA1, the black step line, and the Slingshot. There's a couple other ones that I'm going to show to you, but those are the main things that you're going to be looking at. All right, divergence and separation, what that means, how we use it differently than people might have heard in the past. What's a stop loss, what's a target, what's a bracket. The steps for taking a trade, the actual steps that you have to do for a trade. I mean, I'll go through them one by one. And how to enter a trade, how to exit a trade, what do you expect from a trade? I'll teach you how to do that once you get into a trade. Anybody can enter a trade, anybody can exit a trade, but knowing what to do when you get in a trade, that's important. Knowing when to exit, how to exit. Is there a track record? Yes. Is there personal training? Of course. And how do you get started? I'll tell you about that. And the rest of this. Do you need your own charting platform? Well, that's part of the free stuff. All right, so here we go. Let's start out with the free stuff. First thing, weekly trading zones and TradingView charts. Now, the weekly trading zones, they are something that we send out every Monday morning, okay? Now, you will be getting them. I mean, we said we're going to give you some free ones for this week. These are the zones for December 5th. Now, I know it's just a string of numbers right here to you, but I'll show you how to use them in just a minute. We do them for the ES, the YM, the Russell, crude oil, and a couple other markets. I think we're doing for 6 or 8 markets altogether. The important thing here is the count and this string of numbers. The count and this string of numbers. The count and this string of numbers. Okay. We send them out. Now it says Sunday, December 5th because the market's actually open Sunday night at 6 p.m. Eastern time. But the zones actually come out at 6:15 in the morning every Monday. Okay, so whatever zones you get are going to be for the prior Monday. So if it happens to be Sunday, then you're going to get the zones that were delivered on the prior Monday. If it's Monday, you're going to get the zones that were delivered on Monday. Tuesday, the zones that were delivered the prior Monday. Okay, that's the way that's going to work. Now, let me show you how the zones actually come into play. All right. Let me go back. Let me go back here. I was going to do this. Weekly trading zones. I want to check off these things as we go through them all. Okay. The weekly trading zones are delivered. These are the weekly trading zones, and you can see how the market is pulled toward them. Okay, and when it gets there, it usually consolidates a little bit. But you can see it gets here, consolidates, moves down to the next one. This one didn't consolidate all that much. Move down to the next one. Now this is a 30-minute chart, so each one of these bars is for 30 minutes. But I mean, you could change this to whatever you want. A 5-minute chart. And the weekly trading zones are still the same. They still apply the same way. They act the same way. Price is going to go to them, consolidate. Normally it's going to go to them and consolidate. And it's just something that you can use in your trading. The way that I use it is I don't like to trade going into the zones. And if I'm long, or if I buy down here and I see the zone is up there, then I know to expect it to get to the zone. If I sell over here and I see the zone is down there, I know to expect it to drop down to the zone. Okay, that's how you use weekly trading zones. So let me minimize this right quick. Okay, go back to my handy checklist. And so we've checked off weekly trading zones. Now I'm going to give you whatever the prior Monday zones for free on that. All right, you get those for free. TradingView charts. Now, this is something that is relatively new. I'm going to check that box right here. This is something that is relatively new. And all you have to do to get TradingView charts is simply go here to tradingview.com. When you get here, do not click get started. Okay, do not click get started. Go over here and click on chart. When you click on chart, it's going to bring some kind of chart up. But yours is probably going to be some kind of equity chart or something like that. This is the mini S&P 500 on a 30-minute chart. Okay, you'll get this for free. All right, it's going to be delayed data, but you'll still get it. If you go to equities, if you go here to stocks, this is what most people are familiar with. If you go here, let me just do the popular stock. If you go here to stocks, this is not going to be delayed data. This is going to be real-time data. But to get to the TradingView charts, all you have to do, well, it looks like I already did it, but all you have to do is take a free trial. What you do is click here. All right, so if we go back here, don't click get started, click on chart, and it's going to bring something up. Then click on start free trial right here. Okay, when you hit that, it's going to bring this up. Now this is a demo account that I was using, but just to take you through the process, you just have to go down here, don't have an account, sign up. Click on sign up, and you can use whatever you want to use. If you use your email, that's what I do. It's going to automatically assign you. If I click on email, you'll have to put in your email and some username, password, all that. Hit create account, and when you do that, it is going to send you a confirmation email that you're going to have to click on. Okay, now the confirmation email will look like, hold on, let me get it. Confirmation email will look like this. All right, you have to hit activate account. Once you hit activate account, then you will be able to get right into your TradingView charts. All right, now just so you can see what it would look like, you'll have to go here, go down and sign in. All right, now I'm going to use a different ID. I'm going to use this ID right here and sign in. And this is what the TradingView charts look like. Now, you're not going to have indicators on it right away. These are all the indicators that you're going to need, but I'll get into that. To apply the indicators, what you need to do is come here, this thing right here, that whatever that is, click on that and send that to us. All right, you'll have an email address to send it to. You can send it to support@cfrn.net. Okay. Now, when you're doing this, go to indicators right here, and down here it's going to have a different thing for you down here. See, it's not showing it right here because I am not logged in appropriately, but hang on, let me give you exactly what it's going to have. User defined scripts. Here, this is what it is. You'll go here where it says invite only scripts. Okay, click on invite only scripts. Okay, right there, click on invite only scripts. And when you do that, you'll have TIQ price panel and TIQ slingshot. Click on each one of those once. Click on it one time, each one. And I'll show you what it will do. Here you see this is the price panel. I'm going to delete that, and I'm going to delete that. Now, if I go to auto right here, it'll bring all the chart back up. And so all you have to do is go to indicators, invite only scripts, click on that one time, and click on that one time. And then you have your indicators on the chart. They're all in place. You don't have to do anything with it. Now, by default, you're going to have these type of charts. You'll have to use a 10 range. You won't be able to get this unless you are already a TradingView client. But that's just how to get TradingView. Okay, so you'll be able to get our indicators for free for a short period of time, probably a week. We'll be able to give you the indicators for free, and the weekly trading zones. Okay, so I wanted to show you how to get TradingView so you can follow along and look at things with TradingView. All right, so we've done that. Check off TradingView. Okay, so now the next thing, demo versus live. Okay, I'm going to show you something right here, I believe. Right here. Right, I've showed you the weekly trading zones. And you see up here it says demo. You're going to hear a lot of things. If you've been around this futures for any length of time, you're going to have people saying there's a difference between demo and live, and there sure is. I'm doing this recording here on the weekend, so I can't open my live account. But if it says demo up here, it's demo. In the room in the morning, it's going to be live. It won't say demo up there. Okay, it'll say live up there. Well, it won't say anything. It just won't say demo. The difference between demo and live, that's it. Well, that's not the only thing. I mean, in demo, you're going to be able to practice and it won't cost you any money. In live, of course, you're using real money and you have real risk. But that is the difference between demo and live. And I just wanted to point that out because a lot of people will say, well, you're just doing a demo, so it doesn't matter. In the room, it's not going to be demo. All right, so let me check that one off. All right, now we get into range bar. What is a range bar? All right, now, I don't want to go too fast here. I have a tendency to go really fast. So let me show you what a range bar is versus like a 5-minute bar, okay? Now this is a 5-minute bar. When you look at a 5-minute bar, what you see is a bar that opens somewhere and closes somewhere every 5 minutes. You don't know where it's going to open. You don't know where it's going to close. You just know that every 5 minutes, a new bar is going to happen somewhere, okay? Like when this bar opened, it opened down here. I didn't know it was going to go lower. I didn't know it was going to go higher. I didn't know it was going to close up here. Okay, I didn't know this one was going to close up here. I didn't know this one was going to close up here. I didn't know this one was going to close down here. You don't know that. Okay, you have no idea where it's going to close. If it's going to close at the top or the bottom, you don't know any of that stuff. Right? That is like a minute bar. Or if you go in here, these are the different types of bars that are available on this platform. This is DT Pro platform, but time-based, it could be any kind of minute bar or a weekly bar or an hourly bar, anything time-based. You know when it's gonna open and when it's gonna close. A tick bar, now this type of tick is a transaction. Okay, so normally you don't have anything small like that. You'd have some Fibonacci number. We'll say 233 ticks. Okay, and what that means is every 233 transactions, you're gonna get another bar. Now there is a countdown timer you can turn on. It's right over here. I don't have any of this stuff on because I don't use those kind of bars, but it's right here. And you see right here, there's 150 ticks left in this bar. Now, as it counts down, again, it's the weekend, so it's not going to count down. But as it counts down, that number will go down, and when it gets down to 0, it's going to make another bar. Again, you don't know where the bar is going to be, opening or closing. You don't know if it's going to open at the top, at the bottom. You have no idea where it's going to close. It could close anywhere, and it could open anywhere. All right, that's a tick bar. Now, if I go back here to custom, and we do a volume based, this is similar. We'll do like a 10,000 contract bar. What this means is every 10,000 contracts, another bar opens up. Okay, every 10,000 contracts, you're gonna need a new bar. Again, you don't know where the close is gonna be. The close could be up, it could be down, it could be right where it opened, right here. Okay, it could be a Dragonfly Doji, Gravestone Doji. These are all words that we'll teach you over time. But again, you have no idea, right, where it's going to close. Oops, I don't mean to do that. I mean to come here and show you one more thing. Yeah, so we get back to the range bar. Now, this is what I like to use, right? And the reason I like to use it is this right here. I know where the bar is going to close, right? I know there's only 2 places it can close. It can close at the top or it can close at the bottom. And if I'm expecting, like right in here, if I'm expecting price to continue moving up, and I draw a trend line like that, then I'm going to be looking for a bar that's going to close at the top. That's going to be on or above that trend line. Okay, so right there is where I'm going to buy. Now I know ahead of time that the bottom of this bar, right here, you see over there on the side, way over here, I know ahead of time that the bottom of this bar is at 1575. So I know the top is going to be 4 ticks higher. Now in this case, a tick is not a transaction, it's price movement. It's going to be 4 ticks higher at 1675. You see it was 1575 up to 1675, but I know that ahead of time. So if the bottom is here, I know the top's going to be here, and I know that if it closes at the top, that is when I want to jump in. So if I know it's going to close at the top, I can be proactive and put a buy stop order on 1 tick above the top. Okay, that's why these bars are so good, because you can be proactive placing your orders. So I use range bars all the time, all the time. Now you're going to see me using range bars on the ES, on any chart that I put on, you're going to see me using range bars. I can also use these minute bars. I can use a 30-minute bar. I can use hourly bars. I can use whatever. What we're going to teach you works on everything. And in the beginning, you just need to learn the trade setups. And what I'm going to be doing as it's happening, you'll hear me saying out loud, okay, we have a low on this bar. If we get an up close on this bar, we're going to have a long trade. So I'll be saying something like, okay, we got a down close. I mean, we got a low here on this bar, 1575. We're going to high at 1675. If we get an up close at 1675, it's going to be a long trade. Now, I know that's fast, but over a very short amount of time, you'll understand what I'm talking about. You know that the low is here and the high is going to be here, and you can be proactive and get ready with your order. Okay, and you'll see me doing it too. I'll bring my DOM out and I'll show you as I do it. I mean, again, it's the weekend, so I can't really show you on the DOM, but hang on. Okay, you see, I'll bring out a DOM and I'll show you. You can't really see it right here because the market's closed, and this is gold, and compared to the ES. But what I'll be showing you here is when I put the order on, how I place the order, and that's the information that you'd be able to get from me. Okay. And then again, I mean, any questions that anybody has in the meantime, while I'm in the middle of walking through charts, I'd be happy to go over it. All right, so I just said, what is a range bar? An up close is when it closes at the top, a down close is when it closes at the bottom. The reason they're important is because you can be proactive. If you're looking for an up close, you know where it's going to be. You can be proactive, put a buy stop above it. If you're looking for a down close, for instance, like right here, hang on, let me slide this over here. Like right here, for instance, if you're looking for a down close, then you can put a sell stop on and be ready ahead of time. Okay, that's the up close and the down close. Now, what is the trend and why is it important? Well, that is what determines what direction you're going to be going in. Okay, we have indicators that help us determine the trend, and I'm going to get into those in just a second. But what we want to see for the trend, we want to see higher highs and higher lows. Okay, when I say that, what I mean is we want to see things like this: higher highs and higher lows, like this. Okay, that is an uptrend. All right. Conversely, we want to see lower highs, like this. Okay, and lower lows, like this. All right, that is a downtrend. So when it's going up, we want to look for opportunities to buy and go long and run with the trend. And when it's going down, we want to look for opportunities to sell and go short and go with the trend. All right, so this is all stuff that I'm going to teach you. All right, I'm going to teach you and I'm going to do it in front of you, and you will learn how to do it. That is the trend. Okay, now the difference between a price panel and an oscillator panel. Well, for this, I'm going to put an indicator on. Okay, I don't have any indicators on here right now, but there is a set of indicators that you're going to get when you actually sign on with us and you become an active CFRN partner. Okay, but the Slingshot is going to be the first one that's going to be in the oscillator panel. So to put that on, you just do what I just did right there. I right click on the chart, go to indicators, CFRN, choose the Slingshot. Okay, click create new area, come in here, right here, S3 cycle on, set that to true. And right here, S1 fast on, set that to true. Save as default and say okay. Now this is the oscillator area. Okay, it's loading up right now. It'll come on in just a second. Up here is the price panel. Okay, so this is the Slingshot and this is the price panel. Now I said we have indicators that are going to help you with the trend. This line right here is called the cycle within Slingshot. That is the slowest line we have on the chart. Okay, that is the slowest line on the chart. That is going to be your trend. This green line right here is the fastest line that we have on the chart. That is going to be your quick pull away, your indication that you're pulling away from whatever the longer term trend is. Okay, like right in here, you see price pulled away from the longer term trend. You can see it up here in the price. So you would go short right here. You would sell right there and buy it back down here. Sell there, buy it back down here. Now, I'm going to get rid of those tool tips because They keep getting in front of us here. All right, that's all you have to do to get rid of the tooltips. But you would sell up here and buy it back down here, or somewhere down there. And if you're going long, you would look for the same type of thing, separation between the slingshot, between the cycle and the green line in the slingshot. You would buy here and sell it up here, or here, or here. And that's all you're going to be looking for, okay? And you're going to be seeing it again and again and again. And I've been doing this for over 10 years. It's the same thing, day after day after day, okay? That's the slingshot, okay? Now the MA1 and the BBC, I'm going to put those on in just a second. The difference between the price panel and the oscillator panel is down here, the price panel is up here, okay? So you understand that part about the charts. Now, one of the other indicators that comes with our set is this one right here, called the cfcfrn. Now you just have to put this on as default. Everything is set to default on this, and it's going to have 3 lines in it, okay? One is going to be a black line. One is going to be, let me set the black line. The black line is going to be, I'm going to make it a step line like that. One is going to be a black line. One is going to be called the MA1, and one is going to be called the BBC. Okay. Now when they load up, you'll see how all the pieces start to come together. Okay. See, these are the lines that you're going to see. Now we have the BBC, which is the green line, the MA1, which is the red and blue line, and the black step line. Now, for the things that we do in the room in the morning, the black step line only comes into play to disqualify trades. All right, it does not qualify trades; it only disqualifies trades. All right. Basically, what you're going to be looking for is the MA1, which is the red and blue line, to cross the BBC in the direction of the trend. You see how the trend is going down right here? You're going to be looking for the MA1, the red and blue line, to cross down below the BBC like that. Once it does that, you're trading in the direction of the trend. So then you're going to be looking for an opportunity for the slingshot to give you an opportunity to go short, to sell the market, okay? Or conversely, to buy the market. Like right over here, for instance. You would be buying the market in here, right? You see how we got the bullish cross right there? That's bullish when the cycle, the MA1 crosses above the BBC, that is bullish. Now right in here, you got a little bit of pullback. In hindsight, it looks like this, but in real time, you only saw the separation right here. You didn't have this line painted yet. So there was a trade right here. You could have gone long right there. There's another one right there. You could have gone long. There's another one right there. You could have gone long. Okay, another one right here. You could have gone long. When I say go long, I mean buy. Okay, and on every one of these buys, you're looking to sell at a little bit higher price, a little bit higher, just every time a little bit higher. And this is a really fast time frame. You can do this on whatever time frame you want. As I showed you, you're just going to have to change the risk, but all the rules are the same. You're still looking for the same things, and all the rules are the same. Okay, so you're looking for exactly the same stuff in here. All right. Okay, so this is a 233 tick. So, it's all the same stuff. You're looking for exactly the same thing. So if my time frame is too fast for you, then you can change it to whatever time frame suits you. For me, I trade 9:30 a.m. to 11:30 a.m. in the morning. All right. And when I get to the history thing, the track record thing, I'll show you some things. There's only so much that I can say about that, but I'll show you some things that I think you'll find interesting. Okay. Now, the BBC, here, let me bring my checklist back out. The BBC, the MA1, and the black step line. Okay, so those are those 3 things there, and that's what we use to enter trades, all right? To tell us when to enter trades, when to start looking in what direction, and when to enter trades, all right? Now, divergence and separation, that is what I showed you down here. Now, a lot of places will say when there's divergence between, say price, like right here, this is all going up, and I don't really see any divergence. Here we go. Here's some divergence. In a lot of rooms, they'll say, okay, there's divergence between the price. You see how price is going up right here? But down here, these lines right here are going down. I'm looking at just the red and blue one. Okay, they're going down, even if you include the green ones. All these lines are going down. The tops of these lines are going down while price is continuing to go up. So eventually it's going to correct itself in one direction or the other. But we don't look at it that way. That's not how we look at divergence, okay? The way that we look at divergence is within the indicator itself, right? Divergence or separation. That is separation between the green line, and the cycle within the slingshot. Okay, again, I've described to you how the cycle is the longer term direction, the green line is the shorter term direction. So if the green line is pulling away from the longer term direction, like this, that is an opportunity to jump in the flow when it starts going back in the longer term direction. Okay, so right there you would go, right there you would go. You see how it's pulled away right there? That's what that's telling you. All right, now all of these indicators are proprietary, but you will learn how to use all of them. You'll learn what they all mean over time. So that's divergence and separation. Now a stop loss. Now the reason I use a stop loss, an 8-tick stop loss. What that is 2 bar lengths. Now because this is a 4-tick range, I use an 8-tick stop. Now on different markets, that has a different value. The mini ES, that's what this is right here. For instance, the mini ES is $12.50 per tick. Okay, so every time price moves 1 tick up or down, it's $12.50, depending on which direction you're in. You know, if you're short and it moves down $12.50, that's plus $12.50 for you. If you're long and it moves down $12.50, that's minus $12.50. And if you're long and it moves up to 1 tick, that's plus $12.50. So that's for the ES. Now, the other markets that we trade in the room typically are gold and crude oil. Those are $10 per tick. Okay, those are the markets that we typically trade in the room. But we also trade other markets like the YM I've been trading recently, and that's $5 per tick. So we don't like to risk more than $100 on any one trade per contract. Okay, the ES we risk 8 ticks. That's exactly $100. On crude oil and gold, we risk 8 ticks. That's only $80 per contract. That's on any one trade. And now when I get to the spreadsheet at the end, you'll see that we have, now in those 2 hours in the morning, we generally have 20 to 30 trades. And there's more than that. That's just what I managed to do. Okay, but I wanted to go through different tick variations and the stop loss information. So our stop loss, that's the maximum that you will lose on a given trade. We always enter trades with the stop loss, and you have to have a risk management strategy. Okay, and I'll tell you what mine is. Mine is you have to have 4 ticks, move your stop to break even after you get 4 ticks in profit or close on the other side of the MA1. So what that would mean is, like, let's say you got long right here. You went long, you bought right here. When price got up here, you know, my risk originally would be 8 ticks down. So my risk would originally be down here. So if price got down here, it would stop me out and I'd lose money. But as soon as price gets up to this level right here, 2 things have happened. 1, it's gone 4 ticks into profit, and 2, it's closed above the MA1. So my stop would automatically go to break even. So at this point, I don't have any risk on the trade anymore, and I'm just waiting to see it go up here. Okay, that is what the stop loss is. Check that one off my list. Now, the target is something that it develops as the markets develop. You can see it a lot of times when you get into a trade. You can see a good target would be the prior swing high or low when you get into it, and I'll teach you how to read the DOM so you can see more than that. There's a lot more that can be seen and taken out of the market if you just know what to look for. Okay, so like when you get in a trade like this one right here, there might be something up here that's saying it's really trying to get up to this number right up here. And you'll see me do that again and again and again and again in the morning, and I'll teach you how to do it, and how to read the markets, and how to see how to expect that. All right, that's what a target is. Now, I typically don't put targets on when I enter a trade. I typically put them on while I'm in a trade. Okay, when I see a good place for it to go, I'll put a target on there. But I'll get in a trade open-ended with no target, because a lot of times you get in a trade like this one right here and it might move really fast all the way down. And in that case, you don't want to have a target because you can get more than what your target would be typically, which brings us to the bracket. Now, when you set up a bracket on your DOM is depth of market. What you what you do here, you would do this, okay? And what this is, what this is right here, if I do that and that, what this is a bracket of 8 ticks. Like if I were to enter here, you see right here, I have my cursor on the green. If you look just to the right on the other side, you see those orange things? The one down below would be my stop, and the one up above would be my target, okay? That's what a bracket is. When you put a trade on like that, you have a target that's set and a stop that's set. Both of those you can move around. You can grab them and move them around. Again, it's the weekend, so I can't do it right now. But that's how you set a target and a stop at the same time. It's called a bracket, okay? Now the step-by-step trades for the trade setup, well, I basically went through those. Step 1 is you have to have a trend. Step 2, the MA1 cross. Step 3, after the cross, price has to pull away from the BBC. That means you have to have a bar that is closed that is pulled at least 1 tick away from the BBC. All right. Step 3, that's step 3. Step 4, you want to see it pull back and touch the BBC preferably. And step 5, you want to have the right kind of separation in the slingshot. Okay. Simple steps. Once you do them, once you see me do them like a whole bunch of times, it's the same thing again and again and again. This trading stuff should be boring for you. It shouldn't be. You shouldn't be worried about every trade you get into. You shouldn't be worried about whether you're going to make money when you sit down. You should just sit down, know what you're going to do, and do it. And that's what it's going to come down to, is you actually doing what we teach you how to do. So those are the steps for the trade setups. How do you enter? You put a buy stop or a sell stop, or you just wait until it closes and you enter at the limit. You don't enter at the market. Okay, you exit. I explained that, how to put a target on. And I'll also explain how to trail stops and all of that. What to expect out of a trade. I'll teach you how to see what to expect out of the trade, but normally it's going to be at least a prior swing high or low. Okay, is there a track record? Yeah, let me bring the track record up. Here it is right here, okay. Now I can't go into a whole bunch of detail about this, but we fill this out at the end of every session, every day. And it's just what I do in the morning session, okay? And I don't get every trade in the morning session, and I don't make money on every trade. And I keeps track of the number of ticks that I make per market. See, these are the different markets that I've been trading recently. The ES is over here. That's the mini S&P 500, gold, crude oil, the NQ, the euro, the YM. I've been trading the YM this week because we had a problem with the ES this week, because we had FOMC come out and the ES market was, the actual charts were getting all jammed up. So I went to the YM and I traded the YM instead. So this was $5 a tick, and this is $12.50 a tick. So this is the number of ticks that I got for the YM, and this is crude oil, the number that I got there, and gold, the number that I got there. This column is what I ended up with after the first 2 hours in the morning. That's for one contract. And this column here, this is the one that I thought you might find interesting, because we have a thing called the 24/20 blueprint. And what we want you to do is learn how to just get your goal for the day. Set a goal that you can achieve every day and get to the point where you're trading consistently and you can achieve that goal and then stop trading. Now, what we want you to do is learn how to get to your goal and then add a contract. When you've reached, say, $2,000 profit, add a contract, and then you can trade 2 contracts and you're making twice as much per tick. Okay, when you make another $2,000 per contract, add another one. Then you're trading 3 contracts and you're making 3 times as much per tick. Okay, so this is how long it took me to get my goal for the day, and the number of trades. This is the number of minutes. I think, let me see. This is the number, I think, yeah, the number of minutes is this. This is the number of minutes it took me to get my goal for the day, and this is the number of trades to get my goal for the day. Now, if the column is green, that means I got my goal, okay? And you see all these columns are green, that means I got my goal on all those days. We go all the way back quite a ways. Right here means this one, I did get my goal, but I gave it back, right? I don't know what day that was. If I go back here, that was 9/27 last year. I got my goal, but I gave it all back. I think I ended minus $242.50 that day. That was my worst day last year. But I mean, it's just one day out of the whole year. But so yeah, track record. We have a track record. I mean, we keep track of it that way. At the end of every session, I fill that out. Okay, is there personal training? That's something that's really special about us. Yeah, there is personal training, and yeah, we'll do one-on-one training with you. Now there's 4 of us that can do it. There's me, Bert, Valerie, and Dwayne. Depending what kind of thing you're interested in, I'll do the short-term stuff. The setup stuff is going to be me, Bert, or Valerie. The longer-term stuff is pretty much going to be Dwayne. Okay, and that's that part of it. How do you get started? Well, from here, you're just going to click on whatever the other link is that's on this page to go to the next page. And you need your own charting platform. Well, for what you're going to be doing in the very beginning, you can just watch mine. You'll be able to watch my charts in the morning. You'll be able to listen to me and see what's happening because it's all real time in the morning. Called real time live markets in the morning. So that's all you need to do. So how do you get started? You're going to see a link in the next page you go to. How much does it cost? Well, you're going to see that in the next page too, but it's really cheap. We've made it really inexpensive to get started at this level. Okay, what we want you to do is get in, get this level, see what everything is, and then if you have a thirst for more, well, we have so much more. We're just scratching the surface with what we're talking about right here. Just scratching the surface. There is so much more to do and learn. Okay, so I think that's pretty much everything that I wanted to show to you. Yeah, so that's it. So this is the set of indicators that you're going to see. And if I bring the TradingView chart back over, you see it's a similar set of indicators. There's one more thing on here that's not on there. This is a 10-tick range instead of a 4-tick range, but you'll be able to get all of these indicators in this chart for free. You just have to give us that ID, this one right here, okay, whatever yours happens to be. And we'll be able to set you up for like a week of free charts. So you'll be able to look at the indicators, whenever you want to. You won't have to be there in the morning session. But that's it. So with that, I guess I'll wrap this meeting up. And if anybody has any questions, you can email support@cfrn.net. Support@cfrn.net. Okay. All right. That's it. Thanks.